Welcome to another episode of Coffee with Alissa. As we continue our series of value-add services that our advisors provide, I'll be interviewing Sean McCann. Sean's an investment analyst on our team, and today we'll be talking about real assets. So many of our clients hold real assets in their portfolio in one way or another. Can you tell us a little bit more about what real assets are?
Yeah, so I think the way to think about real assets, and it's going to sound weird, but is that they're real, they're tangible. Real assets are different than what you would consider financial assets, whereas financial assets, they derive their value from some contractual rights. So if we think like a bond, or a financial asset could also represent an ownership claim such as stocks. Real assets in their case are physical assets, and that they get their worth due to the actual substance of the real asset. So a couple of examples would include commodities. Real estate is a very good example. Land, equipment, and then natural resources. Those are mostly the big ones.
So what are some of the potential benefits of investing in real assets?
So there are a variety of benefits that you can get from adding real assets to a portfolio. First, one that comes to mind is that they have very low correlations to traditional financial assets. So, for example, when your publicly listed stocks and bonds zig, your real asset exposure might zag. And this can be very beneficial, I think, when we have periods of market stress, such as in 2022. I think we saw U.S. large caps down around 30. Publicly listed bonds were down about 15 that year. That same year, some real asset exposures were flat to slightly positive. So in a year where traditional 60-40 portfolio is undergoing stress, and allocation to real assets can be some area of relief. And then the next big benefit I think comes to mind is that in inflationary environments, real assets have historically performed really, really well. And this is mostly just due to the fact that the economic drivers of real assets are often directly or indirectly tied to inflationary trends. So where inflation can be a hindrance to fixed income products, such as a fixed rate bond, for example, real assets can help mitigate the potentially damaging effects of inflation on your portfolio, where in the case as, a bond might lose value over time due to having higher inflation.
Well, as with any type of investment, there aren't just benefits. So what are some of the potential disadvantages for investing in real assets?
Yeah, the two big ones that come to mind, I think a lot of investors have experienced this over the last 2 years or so. The first one being illiquidity. So an investor will not always be able to get their money out of real assets without some kind of discount being applied if they wanted their funds today. And this is due to the fact that a lot of these assets are privately held. And this negative or disadvantage of real assets can be stressful, I think, to some investors when we have times of market downturn and, they are a bit hesitant to be invested in private markets. They want to get their money out. I know sometimes that taking a discount or maybe having to wait some time could be stressful. And I think this is probably the biggest disadvantage of real assets. The other one that comes to mind is that when we have an environment, like a high growth environment, where I think last year, for example, the S&P 500 was up high double digits, your real asset exposure is traditionally it's not going to keep up in those environments. But in markets where they're down, and I think I kind of mentioned this earlier, real assets can perform really well. It's in those environments where stocks are doing great, or maybe international stocks are doing great. Your real asset, the expectation shouldn't be that your real asset exposure is going to keep up and provide the same high double-digit returns. So
when we think about adding real assets to a portfolio, most people cannot just go out and invest in a piece of farmland or timberland or I don't know, you name it, right? A public utility or a private utility company, right? So how can investors get real assets into their portfolio? And are there like different kinds of wrappers that make it, affordable to purchase?
There are a variety of different ways you can get exposure to real assets, all coming with different implications. And this is mostly on the liquidity side. So an investor or somebody can own the underlying asset directly. So if you own real estate and you rent it out, you have a summer home, you rent it out, that could be some direct exposure to real assets. Now, this is also, so that's the most direct way to own real assets. but it's also one of the most least liquid ways of owning real assets. Another illiquid way that you can get exposure to real assets would be in a privately listed real asset fund. So very similar to like a private equity fund. This would be traditional drawdown structure where, you say, okay, I'm going to commit 250,000 to this fund, and they call that capital over time. Real assets have a very similar vehicle to that, where the investment period for these funds can be 10 years plus, just because of the long-term nature of real assets. And in this case, an investor shouldn't have the expectation of getting liquidity or any money from the fund for a couple of years. That would be the second privately held way of, I guess, of having real asset exposure. Kind of moving down the liquidity scale, we could also get real asset exposure through interval funds. So these provide quarterly liquidity. Sometimes they might have private exposure, sometimes they might have public exposure, sometimes they have both. But in this case, a lot of these funds only provide liquidity on a quarterly basis or every 3 months. And in some cases, they don't provide you 100% exposure. They might only provide you 5% or 5% liquidity as opposed to like 100% liquidity. And then the most liquid way to own real assets would be in a mutual fund wrapper or ETF, where you can get daily liquidity. A lot of times, these funds actually own other publicly listed real assets, and so that's why they're able to provide that exposure every day. But going direct and owning the actual asset or having a private fund is probably the least liquid way to own real assets, and then kind of having your traditional publicly listed mutual fund that I think a lot of people are familiar with would be the most liquid way to own it.
Well, Sean, I really appreciate you sharing more about real assets. I know, it's not the right investment for everyone, but I think what you did was inform people of, what they are, what their pros and cons are, and, how they could potentially invest depending on just their, net worth and available, like how much liquidity that they do need. So if anyone wants more information on investing in real assets, we're happy to have a conversation with you and, about how we do it here at Schneider Downs Wealth Management. You can certainly reach out to us via our website. And yeah, thanks for joining us and watching. We'll see you next month.